India actually used to be one of the biggest drivers of global growth in the early 19th, 20th century. India, of course, we've seen Hindu rate of growth of 3% and then 6% per annum. Since 2003, we've seen a structural break in India's growth trajectory. Real GDP per annum has been growing at between 7 to 8.5% per annum. After China, India is the world's second fastest growing economy. We are now close to $2 trillion economy. Per capita income has grown from under $1,000 to now close to $1,500 US dollar per capita. And this influence is really reflected also in the entrepreneurial spirits of the Indian business sector. Outward FDI from India has been rising at quite a fast pace, and in fact outward FDI from India is even higher than the outward FDI that China has seen. So clearly showing the kind of needs and the requirement of Indian business to capture global market shares, the aspirations of the Indian business class. So India is now in the spotlight as far as the global investors, the global MNCs are concerned, and it will remain one of the fastest growing markets in the coming years as well. India has a lot of inherent advantages. Three things that clearly come to mind. One is, of course, India's demographic advantage. Over the next 20 years, India is going to add close to 150 million workers or so to its working age population. Labor force working age population picking up also means savings rate in India is going to go up, and that can be a sustainable driver of investment in India in the coming years. So demographic advantage is one. Second, India has huge investment needs. Infrastructure requirements are $1 trillion in the next 5 years, and almost 50% of this is expected to come from the private sector. We have investment requirements in power, in roads, in urban infrastructure, in railways. Therefore, the scope for private sector to really invest in infrastructure is quite large. The third advantage India has is really productivity. Usually as economies grow, we see migration from the rural to urban areas, and that leads to productivity gains in an economy. So when one combines the effect of more infrastructure coming in, greater migration, rural urban migration, along with the scope for a lot of reforms that India is likely to see, the potential for India to actually grow at a very fast pace is quite substantial. India can actually be one of the fastest growing economy. If one looks at and scans all the countries in the world, the country that clearly stands out in terms of potential is India. We have a labor advantage, we need the capital, there's scope for a lot of productivity gains. So India can actually continue to grow at a very fast pace in the coming years. Tremendous potential for India to actually continue to grow at a very fast pace in the coming years if all the basic ingredients are put in place. The 1991 reforms in India was the start of a pickup in India's potential growth. The industrial sector was delicensed. The external sector, a lot of restrictions on imports and exports, they were deregulated. During the late 1990s, in fact, we saw interest rates getting liberalized. Foreign investment in a lot of sectors was encouraged, FDI limits opened up, portfolio investment encouraged. So what we really saw is a complete opening up of the economy, both on the trade account as well as on the financial account. And the impact was one, tremendous increase in the exports for India, increase in India's share actually in the world export market, which has risen quite substantially, clearly going on to show that Indian manufacturing sector has been able to gain global market share. The liberalization of interest rates led to a sharp reduction in interest rates. Private banking coming in led to a big pickup in retail banking. Consumer credit started picking up, with investments also picking up because foreign investment was coming in. Investments rose from close to 25% of GDP to about 35% of GDP. High investments created consumption demand. We got a lot of capital flows, and that actually led to a virtuous spiral of consumption, investment, capital flows, rising income, leading to more domestic demand. What India needs now clearly is a second generation of reforms. We have benefited quite substantially from the reforms of the 1990s. Given the supply constraints India is facing right now, there is a need for a second generation of reforms that focuses on private investments in agriculture, focuses on private investment in infrastructure, so that India can grow sustainably at 9 to 10% per annum in the coming years. Services have been India's sort of dark horse. They have been extremely resilient. Services now account for 55% of GDP, and despite the huge business cycles we've seen in the industrial sector, services in India have continued to grow at double-digit rates. And the services in India, of course, the one sector that is very well known is the IT business services. But it's not just the software services side where India is actually doing well. India is doing very well as far as the business financial services are concerned. The entire arena of the leisure entertainment sector, hotels, realty, they have actually been growing at a very fast pace. And clearly goes on to show that consumption demand in India is clearly taking off. And even though demand has been growing at a very strong pace, India is still only a $1,500 per capita economy. In fact, rural India is still at a very, very early stages of an economic takeoff. Rural per capita incomes are still under $1,000 per capita. And what we've seen from other countries' experience is that the closer per capita income comes to $1,000, and which is what we are going to see in rural India in the coming years. There's been a complete explosion of demand, and this explosion of demand is not just for your typical food items, but as incomes grow, there is increased demand for even higher value-added consumption items. Discretionary consumption items goes up, services demand goes up. And this is benefiting India in various terms. One, consumption is very resilient. Second, to the extent that we are exporting some of our services like software, business financial services, that's helping our current account deficit by keeping our invisibles very strong. And third, this is a sector where employment opportunities clearly do exist. So despite the business cycles, the fact that India is almost 55% dependent on services, a sector which is resilient, clearly goes on to show that business cycles in India will not be the amplitudes will not be as volatile as they are in some of the other countries. India has actually benefited quite substantially from FDI inflows. Last year, in the financial year that ended in March 2012, India received more than $40 billion worth of gross FDI inflows, and we are getting this FDI inflows in different sectors. So it's not just concentrated in the manufacturing sectors of oil and gas, but also in different services sectors, financial services, business services, software is getting a lot of FDI money. And this FDI money serves two purposes. One, of course, India being a capital deficient economy needs this FDI to finance its investment. But second, also from the R&D and the technological know-how perspective, it has actually been one of the very important drivers of productivity gains in India. It's very important to look at India in a global context because the developed markets are slowing down. We do not have much consumption demand as far as the world economy is concerned, and companies are looking for countries where there is high demand and where there is sustainable high demand, and there are very few countries which actually offer that opportunity. India, where consumption is nominally growing at double digits per annum, clearly stands out as one country where there is huge consumption potential, and foreign direct investment in India clearly is going to come into the country in search for supply goods and meet domestic consumption requirements, but also potentially use India as a manufacturing base for export from India. India has the labor advantage, then India can be used as a regional exporting hub in the coming years. So the scope for FDI in India to pick up for domestic consumption and for export is quite substantial.